Hey guys, Tony Denaro here. A lot of you have been asking me in the live streams during the weekdays what my thoughts are on SOFI as it has been dropping and now reached a new low of $6.32. Is SOFI a buy right now, considering that the student loans just got another moratorium from the Biden administration? Let's talk some SOFI. SOFI is a fintech company with a broad array of product offerings to its customers. It's been the darling of the millennial investing crowd for the last year, although it's been under some pressure since November 2021. I'm going to go over the chart and a couple of quick highlights of SOFI. Then we're going to do a quick deep dive into their financials and the latest announcement from the Biden administration and talk about if SOFI is a good investment right now. SOFI did its IPO in June of 2021. Here on the very left-hand side of the chart, you can see it quickly ran up to $25. And after a couple weeks, that initial euphoria wore off. And then in late 2021, it rallied all the way back up almost to $25, popping on Q3 earnings. But then as November progressed and people started wrestling with the thoughts of inflationary fears and interest rate hikes, SOFI has been tumbling like most stocks have been for the last 5 months, closing out the trading day on April 22nd, 2022 at $6.39. As this is an all-time low for the stock, many people are considering that maybe SOFI is a bargain in the $6 range, and that's the question that we're going to tackle today. Looking at some due diligence, looking at the financials, and the outlook for this company. Should you invest in SOFI or should you be looking at some of its peers? SOFI is a completely digital banking company that launched in August of 2011. They're based in Silicon Valley. As you can see from their website here, they've got a ton of different products that they offer to their customers. I'm going to run through them really quickly. They do have an investing platform where you can buy stocks and crypto. Two things to note on that: stock trading on SOFI is a payment for order flow platform. And crypto, you do not have your own personal crypto wallet. So much like Webull or Robinhood, you cannot transfer crypto in or out of SOFI. That could be important to you if you are an active crypto trader. They do offer credit cards between 13.5% and 25% interest rate, depending on what you qualify for. They do offer personal loans up to $100,000 with interest rates starting at 6.99%. Private student loans and student loan refinancing has really been the bedrock of SOFI, where they started. We'll talk more about that as we get into the financials. Also, for their customers, they offer auto, life, home, and renters insurance. With their acquisition now complete with Golden Pacific Bank, they also now offer completely digital banking through their app or online. There's a tool built into the app to track your credit score and even do budgeting. SOFI is starting to make inroads with their home loans, where you can buy or refinance a home. And rounding it out, they have auto loan refinancing as an option through their network of auto refi lenders. SOFI's target customer is the young, high-income individuals. And as we just saw by looking at all of their products, the way that they are trying to differentiate themselves is by becoming a digital platform where you can take care of a complete suite, really anything you want to do with finances, all right there on their platform. Now, that's not to say that someone else in the financial services industry could not copy this model, but right now SOFI is leading the field in offering this broad array of financial products all in one place on a digital platform. Okay, so why the timing on today's video about SOFI? Besides the fact that the price is at an all-time low, we do have an announcement from SOFI that their earnings is going to be upcoming here in just a couple weeks on May 10th. And we do have an announcement from the Biden administration recently on April 6th, extending the forbearance on student loans, and that we need to talk about. The Biden administration announced an additional extension for the student loan forbearance, which was slated to end at the end of May 2022, and now they are extending it until August 31st, 2022. This means no accrued interest and no required payments. Why does that matter to SOFI? Well, because a large bulk of their income comes from student loan refinancing. And when students aren't having to make their payment, they don't feel as much pressure to refinance those loans. And as it states here in this article, that has been a bit of a headwind for SOFI, slowing down their expectations for growth. In fact, SOFI is trying to get ahead of this. They did a press release on the same day, April 6th, advising investors on updated guidance, and that due to the midterm elections and other factors, that they are expecting there will probably be an additional 7th extension beyond August, extending this moratorium until the end of 2022. Reading from the article here, they are advising updated guidance on their expectations for 2022 adjusted net revenue and adjusted Ebitda, with the adjusted net revenue dropping from $1.57 billion for 2022 to $1.47 billion, and the adjusted Ebitda dropping from $180 million for the year to $100 million. That is about a 45% reduction on adjusted Ebitda for the calendar year. Now, if you're not a finance or accounting person, it's okay. I got your back. Ebitda is one of the measures that we use to measure a company's financial performance. And in plain English, it is earnings before interest, taxes, depreciation, and amortization. On the bright news side, though, SOFI CEO Anthony Noto wants you to know that even with the assumption of no end to the moratorium in 2022, the new full year 22 financial guidance represents 45% year-over-year adjusted net revenue growth, 45% growth year-over-year to $1.47 billion. And even taking into account that reduced Ebitda to $100 million, that still reflects a tripling year-over-year on adjusted Ebitda and a doubling of margins. The other thing that I want to talk about while we are discussing adjusted guidance is to remind you that interest rates are going up, which means mortgage interest rates are going up. Mortgages and mortgage refis are one of the additional pillars of SOFI's income stream, and we do need to also take that into account when we are thinking about what the possible effects could be to their overall revenue and recovery in 2022 and 2023. As we begin to anticipate SOFI's upcoming Q1 earnings on May 10th, let's take a second to reflect back on their most previous quarter, which was announced on March 1st, 2022. I'm just going to read you a couple sentences off of this Morningstar summary. SOFI did meet expectations for revenue guidance. They had predicted between 272 and 282 million. They came in at 280 million for the quarter. The largest driver behind the company's growth was strong personal loan volume, with origination volume rising 168% from last year's quarter to $1.65 billion. And even with the student loan forbearance in effect, student loan origination did show unexpected strength, with origination volume of $1.46 billion, which represents a 50% increase year over year. Morningstar analyst Michael Miller adds one additional thought about the student loan issue, and that is that the politics around debt forbearance and student loan forgiveness remain an ongoing risk for SOFI. Additionally, in the previous quarter, SOFI showed impressive growth in both the SOFI Money and SOFI Invest accounts, 123% increase in SOFI Money accounts year over year, and a 200% increase in SOFI Invest accounts. This impressive growth drove financial services revenue up 440% year over year, bringing in $22 million. Why is this important? Because SOFI sees these money and invest accounts as an important entry ramp into their full portfolio of financial services, and it is a great way of bringing new users into their financial ecosystem. I'm getting very close to sharing with you my thoughts about whether or not I'm going to invest in SOFI at these prices. I currently do not hold a position in SOFI. But as I think about that, one of the things I do is look at their competitors. How are they performing? And we have two that I want to look at with you, Ally Financial and Discover Financial. Discover has an upcoming earnings announcement on April 27th. That's definitely one I'm going to be keeping an eye on. It's just a couple of weeks ahead of that earnings for SOFI. Ally Financial just reported their most recent quarterly earnings about a week ago, and they beat the earnings estimates. It does seem to potentially bode well for SOFI that Ally Financial beat their most recent earnings estimates. We do need to keep an eye on Discover Financial here on April 27th. Pulling these slides from their Q4 2021 investor presentation, which I'll put a link to down in the video description, let's go over a few of the things that I do like about SOFI, and then I'll tell you what I don't like. Things that I do like: they are showing strong momentum, strong growth, and adding members to their platform. SOFI bought payment processing platform Galileo in 2020, and as you can see from the slide here, Galileo's had a nice, steady ramp up in the number of accounts, recently reaching 100 million accounts. When I look at the lending and financial services products of SOFI, there's been nice, steady growth on the lending side and really impressive growth on the financial services products. Quarterly adjusted net revenue continues to show strong growth, although there was a little bit of flattening between Q3 and Q4. I'm going to have my eye on how Q1 looks here in a few weeks. The quarterly adjusted Ebitda numbers have ranged from 4 to 12 million over the past few quarters, with 5 million in the most recent quarter. And although they do not reflect the same ramp up on the quarterly adjusted net revenue, they do indicate that the company is able to generate some cash flow. Morningstar has calculated a fair price for SOFI of $17. Now, that does seem a little bit high to me. I do need to factor in the potential effects of rising interest rates on their suite of products, including home mortgages, home mortgage refis, and auto loan refis. And it is also important that we don't overlook the impact of the student loan moratorium potentially throughout the remainder of 2022. One other potential thing that concerns me, maybe not specific to this upcoming quarter that they're getting ready to report, but maybe throughout the remainder of this year, is the potential bear market in stock and crypto. Simply put, retail investors' potential fear of investing in both stocks and crypto in a bear market could impact revenues on SOFI's invest accounts. All of that being said, what do I think I'm going to do with SOFI going forward? Look, there were people I've watched on YouTube for the last year that were like, SOFI, take my money at $15, $17, $18, $20. I sat that out and I've waited patiently, like I always ask you guys to do. Wait for a pullback. They always come. Let's be honest, SOFI is not generating a profit. They're at least probably 2 years away from generating a positive quarterly earnings. That being said, I think if you get in SOFI at these levels, whether it's $6.40, $6, $5.75, it depends on what the market does in the upcoming weeks and months, and it could be a bear. But if you're willing to weather a little bit of volatility and you buy SOFI, understanding that this is a very speculative investment and you're going to need to be patient, I think ultimately you have a very good chance of being rewarded, and I do plan on being a buyer of SOFI at these levels. I've waited a long time for SOFI to get to a price that I was willing to pay for it to take on that risk of a speculative investment. And my friends, this is your moment if you've been patient. I am Tony Denaro, and I hope you got some value out of today's presentation. If you did, please do not forget to buy and hold that subscribe button. Join me on one of my live streams. I cover the market at market open and market close every day. I hope to see you on one of those lives, and please feel free to ask questions. That is what I'm there for, to help you guys out. The voice of a seasoned and reasoned investor. No super chats required. As always, thank you for watching, and I will see you on the next video.
My stability. You think I'll fall just like a kid.